The cash rate will stay low. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this Bloomberg article from Yahoo Finance. RBA's low, says Australia, the Australian rate to stay low for quite some time. Well, low wants a low cash rate. And for those of you that have been living on the moon, the cash rate is 0.1%. I remember we looked at an article a couple of months ago talking about housing predictions and all of this stuff, and they were discussing the emergency low cash rate of 3%. 3%. Now it's 0.1, which is insane. There's even some discussions of potential negative interest rate. Just imagine trying to save for a deposit these days and getting absolutely no interest. I've got a Rabo bank account just so, and I got to jump through these hoops, and it's a primitive, terrible interface. They send you like a key thing, and you got to, and so I can get 4 months of bonus interest of 1.75%. CPI is at what, 0.9 right now? That's, what are we looking at here? CPI, yeah, wait a minute. CPI is at 0.9. So you need to be getting more than 0.9%, else your purchasing power is eroding. So if you've got, I think the CommBank got like advanced super saver, double plus, good plus, 0.55. So there your money is actually losing value. Cash is losing value. They want you to spend it, guys. They want you all to be good little consumers and to spend. So Australia's central bank chief, Philip Lowe, said the outlook for the economy has improved, though interest rates will remain low for quite a while yet, amid muted price pressure. The downturn in Australia was not as deep as we had feared, and the recovery started earlier and has been stronger than we were expecting, the Reserve Bank of Australia governor told a panel of lawmakers during testimony in Canberra on Friday. This does not disguise the fact that we still have a fair way to go. Now, fundamentally, we've seen in other articles, other statements, our governor doesn't care about house prices. He's not worried about it. He's worried about jobs and employment. But, house prices inflating, particularly with all of the government stimulus, incentives, and just our culture obsessed with houses, is going to divert resources from other parts of the economy. And it's going to reduce the quality of life of a lot of people. Imagine how hard it would be these days to raise a family on one income, to have a house, and to go on a holiday. That's a boomer life, guys. You can't have that anymore. It's a lot harder, not for the average person, not for the average job. The RBA surprised markets on Tuesday when it announced an extension of its bond buying program. Really? Did it surprise markets? They've said in the past they will buy as many bonds as are necessary. They've said we're going to buy 100 million here, but then we'll buy as much as necessary to hit our target rate. They've said that. QE. We've got QE here in Australia. To the moon, everyone. So in an effort to remain in line with international peers and avoid an unwelcome spike in the currency. Lowe also said he didn't expect to raise interest rates until at least 2024, with employment and inflation remaining well short of targets. Well, did they ever actually get to the inflation that they want to achieve? The RBA aims to return inflation to a 2 to 3% range on a sustainable basis, a result that requires a tighter labour market to spur faster wages growth. But we don't have. Look at wage growth. Look at the RBA's attempts, multiple attempts to predict wage growth. It's just failing. 2011, 2012, 2013, 14, 15, 16, 17. I need to get an updated version of this chart. But this just tells us. This just shows you. Do you have any faith in their ability to predict these things? While unemployment has fallen sooner than expected, the RBA says it remains elevated over the next 1.5 years, or sees it remaining elevated over the next 2.5 years. I'm not reading right. I need a shot of coffee. But we're facing the job seeker cliff. We can't really... They can't say that the economy is running fine or back to normal when you still have these interventions in the market. It's when they remove these props. That's when you see if the slab is solid or if it starts cracking. Wage growth and inflation are both forecast to remain subdued, Lowe said in an opening statement to the House Economics Committee. Wages growth is expected to pick up from its current low rate, but to do so only very gradually and still below 2% at the end of next year. Asked how likely it is the central bank will hit its inflation target by the end of his term in 2023, Lowe replied, not high. See, this is a scary prospect. Which one of the deputies is going to replace Lowe? That's just look them up, have a look at the different characters, the different approaches. It's a concerning future for our country. Perhaps this should be an elected position. What do you reckon? Why not? Let's just go the whole hog. The central bank in November cut its cash rate and 3-year yield target to 0.1%. Those measures, together with the quantitative easing program and a bank lending facility, have driven borrowing costs to record lows. Policymakers are betting a lack of immigration due to COVID border closures will keep a lid on house prices. Yet increasingly strong data suggests the property market is already heating up. It depends on what sector you're looking at. Depends on your location, what newspapers you read, but the apartment market isn't heating up. There'd be that's an anchor around you. Some of these things. While house prices are rising across the country, the national price index is only at a level reached 4 years ago, Lowe said. While the bank isn't focusing on house prices as such, it will watch how money is lent to buy properties, he said. See, this is the concern. Should the bank focus on house prices? It's probably the most important thing in most people's lives, I would say. Getting into housing, having a house, having some stability. Owning a house outright, being debt-free until retirement, you're going to have a better quality of life than someone who's renting and has a bigger super balance. Just stress-wise, that's certainty. We want to see lending standards remain strong, Lowe said. At present, there are few signs of a deterioration in these standards. If that were to change, you could expect that we would be discussing possible responses at the Council of Financial Regulators as we did a few years ago. The 100 billion QE program that will be extended by a further 100 billion mid-April is helping to slow the currency's gain. The local dollar has surged 33% since its March low of 55 US cents, fueled by high iron ore prices and the nation's relatively better health results compared to other developed countries. It is not appreciated by as much as we would have thought, based on the historic relationship with commodity prices, Lowe said. Where the Australian dollar goes from here is dependent on commodity prices and what other central banks do with interest rates, he said. And he's actually in the meeting right now. He's having this meeting right now. So what do you all think, everyone? Should the RBA focus on housing? And do you expect the cash rate ever to rise again? Look at what happened when they tried to normalize rates in the States. We're in a QE world now. QE to the moon. As always, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, support us using PayPal, or join SelfWealth via the link below. You'll get 5 share trades, and we'll get 5 as well. Take care, guys. Have a great day, and I'll see you next time.